So we are going to kick this one off, guys. As you can see here, this deck is the deck that the majority of you guys have been reading through. And I just want to keep the presentation based on that order. I think it's a great order to get you all up to speed by what's happening here with PropChain, what we have in mind, where we are right now, what will happen over the course of the next year, actually, because we have the majority of the roadmap scheduled for this year or for 2022. And I think that it's a pretty interesting timeline on how we are following up on certain major milestones within the roadmap of PropChain, supported by a lot of big players actually in the space. And I think this is a very interesting part to talk about. It's the market validation and what's happening behind the screens. And I think I can, because of the fact that this is a PV webinar, can go a bit broader than just the concept PropChain, but also telling you a little bit more about the vision that these big players, because yeah, look at the logos down below here. We're talking about World Economic Forum. We're talking about the big banks. We're talking about a lot of big players in the space that are constantly talking about tokenization. And there's a reason behind that, because as I mentioned before, I have a very strong belief that the whole blockchain space, crypto space, is initiated by governments, is initiated by the ones that control the globe here. It is one of the most transparent ways to start filling in not only ownership, but also filling in the tracking of transactions. Everything is basically transparent on the blockchain, as you guys all know. And I think ownership and the ownership of assets is still something that is in some jurisdictions quite hard to find out. Next to that, there are a lot of constructions, offshore constructions and so on, that can really wipe out ownership as the ownership of the assets and the trackability of it. And I think these big players are partially involved in this tokenization process just for the traceability of ownership. But next to that, what is very interesting about tokenization are the benefits that come with it. Sorry, I've been talking a lot today, and that are also very beneficial to the bigger players in this world, especially to banks, because I think banks are one of the parties that are very, very locked in their investments. Traditionally, they have a lot of investments that are actually illiquid, that are hard to liquidate for them. And I think tokenization brings the liquidity also to the banks to be able to liquidate positions in illiquid assets in a more frequent and easy way. So this is actually a very interesting part to notice, because the World Economic Forum has been doing some pretty hard predictions. And as we all know, a lot of these predictions that these kind of players make tend to become true because of the fact that they are pulling the strings. So by seeing that, by seeing how involved and how deep the studies went on tokenization in general, so not only real estate tokenization, but also the tokenization of luxury items, for example, tokenization of art, tokenization of participations in investment funds, and so on, is something that we noticed wasn't that much presented to the outside world. I mean, when I started to tell people about this and about the statement that these kind of big players make, they were always pretty surprised that they never heard about it before. And then I always start to think, hey, may that be for a reason? May that be a reason that these guys are not telling everyone how great tokenization is? This is something which is an interesting question. I think it's an interesting question because of the fact that the moment you see how deep they went, but where you know that they didn't tell you that much, there must be something going on. And looking at the predictions here, we have a global real estate market cap approximately of 326.5 trillion. This is something that is, in my opinion, nearly one of the biggest asset classes. They take the global derivative market as well, approximately 543 trillion. This is something where I think the global derivative market is a market which is not a market where you have actual tangible assets. It's mostly still digital. It's based on derived value. So I think that in terms of tangible asset classes, real estate is the biggest. It's 228 trillion at present, if they compare it with the global derivative market. The interesting part is that currently approximately 1 billion is tokenized. So looking at what that is on the total number here of the total market size, it's only a small fraction. The thing is that these pretty accurate guys of the World Economic Forum predict that the market goes to approximately 24 trillion within the next 5 years. And I think that was something that was opening our eyes in a way that we said, hey, this is the thing where we need to focus on. This is where we need to try and see where we can take that market share. And by doing the market research, we actually noticed that there are not too many players around there. There is, I think when you look at the whole tokenization market, there are approximately 20 players that are involved in tokenization. And if you divide that number by 20, then you still have a crazy, crazy share within the market, and you have a crazy target allocation, a market size. It's crazy. And I think that was one of our key activators to not just build the tech, just build the infrastructure, but also to get more specified and more focused on one certain niche. Because from the 20 players that are around globally, only a handful, maybe just a bit more than a handful, is involved and is specialized on real estate. The other players involved in tokenization currently are nothing more and nothing less than an infrastructure provider. So they just provide you the technology so you can get yourself into tokenization. But only having the technology is not where you will win the race, because there is coming so much of a regulatory attention to this concept. So this is where we said, hey, if we narrow down this group of 20 providers in the space, how many, one, do we get in the real estate space? And two, how many of those guys in the real estate space are next to a technology provider, also the ones that are sourcing the real estate, that are maintaining the real estate, that are making sure that the real estate is high yielding, that are making sure that you have the opportunity to build a global diversified portfolio, that are making sure that they can have in their investors board and participate in real estate development projects. So not only the lame buy to rent or buy to let real estate, where you can make between 5 to 7% a year, but where you can also participate in development projects that can do 50, 60% on your money, because that's what development brings you compared to buying real estate to rent out. And all the developers in here know the crazy multiplier of creating the project and owning the full supply chain within property development. And I think this is something where we came from. This is where we decided, okay, we want to focus ourselves on the pretty much biggest tangible asset class in the world. We want to make sure that we bring our network, our experience, our opportunity on the chain, because we also know that we can back it. We don't want to just create a platform and then wait until somebody likes our ID and wants to give his or her house or whatever and want to bring it with us on the blockchain. That's not what we are looking for. This is a very dangerous move to make, because I think this move will generate a risk that in the worst case, you will not have any users. You have a lot of token holders. The token holders will never get a demand for the token because the utility stays out of the platform and we cannot do anything with it. So this is why we've chosen an asset class where we are actually familiar in, where we have an own portfolio, where we have our own developments, where we have an international network that we can link, which we are already linking. We'll be announcing a lot of our partners over the course of the next weeks. We'll also be announcing the team, etc., etc. Very nice heavyweights involved there. And this is why we said, okay, we are going to focus on real estate, bringing it to the real estate. We came up with PropChain, bought the rights, bought the domains, etc., etc. I saw some questions here already about PropChain and some people that are trying to use the name, etc. as well. That's all fine. We have paid a very, very big amount of money to get all of that. But PropChain not only says property on the blockchain. In a further concept, and this is something that is maybe 2, 3, 5 years from now on, we can also bring it to proprietary assets on the blockchain, because that's how broad this name goes. As you can see here, there's more. There's, next to a real estate market, also stock markets. There are investment funds, there's private equity, and so on and so on. There's so much that you can tokenize, but it's not our focus. And I think looking at the competition, looking at the other players involved in the tokenization processes and so on, there's one very, very big thing that will always bring the concepts down. And I think that's a lack of focus. They're trying to go too broad. They don't have the experience coming from one or two of the spaces, or at least the regulated space and the space that they are trying to tokenize. And this is where it goes wrong. You can be a disruptor, but without the experience, you cannot do anything. Anyway, back to the market validation. I think that shows you exactly what is going on this market, how it is predicted to grow, and how we are approaching this from the experience, the network, and the actual properties that we have. Because in fact, we should be able to at least 1 or 2 years drag this platform around, because even in the worst case that no single investor will use our platform, we can still run our real estate transactions that we're doing right now anyway through the platform, and we will still have a use case, and we'll still have a demand for our utility token, and we'll still be able to get a proof of concept going here. Because for us, it makes absolutely no difference. And I think that's a very comfortable position to be in as an initiator of a project like this, as a disruptor, that we know that we don't need marketing in the worst case. We know that we don't need outside money, because we can just run our own transactions over our own platform in order to show the world that this is possible, that this is doing well, that this is easy for the distribution of rent and so on. And I think that's a very comfortable position to be in, not only for us, but also the people that go with us in the project. First of all, guys, some questions. I will do some questions after every slide. So if you have questions with regards to the market validation and so on, please push it in the Q&A box. I will answer the first batch of questions right now. Please only if they go on or if they are relevant to what I've just been telling here. I see that. What does the logo symbolize? You will see it soon in the introduction video, because that will have the animation of the logo. Let me see. In which way would a possible bear market affect the launch of PropChain? I think it's not really relevant to this one, and I will definitely answer it later. Do you see an investment in the prop token as a real estate or crypto investment? Also something we'll take on later. The difference between labs and PropChain, I think that's an interesting one, because I hear it a lot. I have been telling a bit about competition and so on as well. I think labs is, first of all, a project that is not really focusing on what we are doing. They are just a technology provider, basically. They onboard the projects that they want to launch. It's mostly not their projects, so that brings a risk. Furthermore, their native token is one of the tokens that they're running. They also have a stable coin, and they have security tokens, but their focus is more to be the licensed regulated entity that is exchanging the security tokens. So it's more or less a crowdfunding opportunity, other than us as a developer, as a real estate firm, bringing it to the blockchain with full ownership from our end before we list it. So in the basics, they are doing a similar thing. But again, one of the biggest risks here is not having the property yourself. Furthermore, I've been reviewing their platform as well. As I mentioned, we will be posting a full competitive analysis over the course of the next weeks, where we actually describe the differences between us and the other players around, because we like to show you guys what is the big difference here. Please, guys, for all of the questions, don't use the chat box. It's way too crowded. So what is the advantage of buying into PropChain instead of diversifying into REITs? I think that's a very good question. First of all, on the rights, you don't own the real estate. Normally, higher fees. I think with the distribution, you're also in a way less fortunate position. Here in PropChain, if you stake enough of the native token, you will actually be able to pay out your rents daily, your dividends. Furthermore, it's also on the valuation of the properties. So basically what you can see PropChain, and you can see investing in PropChain as owning the real estate yourself without having the hassle with locking or unlocking, the liquidity. And more on that will be presented in a bit. Let me see. Here are some other questions related to this. What impact does an ambitious future have on this project? If hypothetically the world goes into recession, the real estate market will crash as well, likely. Yeah, I think we have seen that in any form of real estate investment. So this is definitely something that you can never go out of the way. But at the same time, you have more liquidity in this than owning the asset yourself, because you can partially sell it. Furthermore, the majority of the times that the real estate market crashes, the rental market stays pretty all right. So that means that there's still yield generated from the tokens. The security tokens, by the way, and I'm going a bit deeper into that further down the presentation, are nothing more and nothing less than digital representations of the participation in the asset. So it means that it's more or less not more volatile than the valuations we do on the properties. So that's something which is pretty much covered. Guys, use the Q&A for questions, please. Thank you. How is the real estate going to be exploited? Depends. Some projects will be developments for sale. The other ones will be rented. So that can really depend per offering on the platform. This property is Sharia certified. So we're in the process right now. We are having some local specialists here to review the process, to review the documentation. So more than likely before launch, we will be fully Sharia compliant as well on the security tokens. On the utility tokens, we're still in the process of working our way around to answer that to all of you. I'm not sure if I understand the valuation of the token. Is it speculative like crypto, or is it just profit sharing? So you get into a property A, doing that with the token, and based on that, you get your share of the rent income. I will explain all of this later on. It will definitely be coming in the next shares, because I see that there's still some unclarity there. Great. I'm going to move forward here, guys, onto the next slide, and that is the issues with real estate. I think the issues with real estate are pretty clear to everyone, but I'm going to review them here, and I'm going to explain you why that can be solved by the tokenization of real estate. So first of all, liquidity. One of the biggest and foremost issues of this asset class is liquidity. For the ones that have been investing in real estate, some of you may know how hard it is, or how much of a long process it is to get rid of your real estate. It's not something that can be done in a couple hours with a bit of an unlucky situation that your notary is not quick and you sell it in a week. You still need to wait between 6 and 8 weeks to get rid of your real estate. And I think that's one of the major problems, that people are not investing the money that needs to stay pretty liquid within this market. Furthermore, I think that also comes down to the second point, that the high entry barriers are a thing that are really limiting people to invest in real estate. Okay, there are rates where you can invest in, which are basically the investment trusts, where you mutually invest with people, but there are high costs. You are not on the owners, or you do not have the ownership of the asset, and there's still a risk for this thing to go default. In this case, I think that the high entry barriers can be taken away by asset tokenization, because we are basically splitting the asset up to 100 or 1,000 or 5,000 fractional tokens that can then be bought. So we can literally lower the barrier. We can make sure that even somebody with only a couple €100 is now able to invest in one of the most secure, and one of the like in the traditional situation, illiquid classes, but now in a very liquid way. And I will show you how that is being handled over the course of the next slides, where I'm going to brief you a bit more on how we are creating that liquidity. Furthermore, I think that the slow administrative processes are, as I mentioned, also a very big hurdle of investing in real estate. It takes long to transfer ownership. I think that also brings you to the lack of diversification, because of the fact that the majority of the time a real estate investor is pretty much locked to their home country, simply because of the fact that they are not allowed to invest over the border, that the legal or the tax issues are playing a role. And I think this is something where asset tokenization, and especially in the way on how PropChain is going to do that, is going to really open up the world of investing globally for investors from any country that is approved by our license and by our regulatory database. Because what we can create, because of the fact that we have an international network, not only of our personal real estate, but also of real estate from partners and segmented real estate. So we have a wide diversity of commercial, residential, even holiday parks, and also industrial real estate that can then be made accessible for anyone that is using the platform. So this is something where you can also start building a diversified portfolio, because even the ones that have been able to invest in real estate can mostly not invest much more than just in 1, 2, 3, maybe 5 or 10 buildings, which are mostly apartments or some small commercial real estate opportunities, but they can never go wide. They can never go globally. They can never have a segmented portfolio, simply because of the lack of funds mostly, which is logical because the entry barriers are way too high. By fractionalizing this and by giving everyone the opportunity to participate with a smaller portion of the pie, they can now build a global segmented real estate portfolio, which is perfectly diversified. Because in the crisis, there's mostly some class of the real estate in general, so that can be industrial or can be residential, that keeps fairly stable. It's not that the whole market crashes mostly, because the income generating real estate, especially the ones that are providing housing or that providing companies, the housing is something that can work and can keep on producing yield. Then the high fees. I think the real estate investment trust, we have talked about it a couple times right now, is something that maintains high fee structure. You have no property ownership. And by tokenizing real estate and making it transferable on the blockchain, you are filtering out a lot of those fees. And I think that's a very great position to be in. I hear a lot of people already, I see it coming in the chat now. What are your fees? So we will have standardized fees. I will go on that part in the later slides within this presentation. Currently, we are still doing a lot of modeling, so we are still keeping the fee structures pretty open, because of the fact that we are working on a very, very extensive staking model. So that gives, I think, another month of modeling at minimum to conclude the final fees. But anyway, more on that in a bit. We have a base layer for that. So then the transparency, I think that's also one of the major problems of real estate investing. There are a lot of backdoor deals. There are a lot of hidden fees mostly. There are people, especially the intermediaries, that are taking part in these kind of transactions. And I think by bringing them on chain, we will get a constant, transparent, and trackable view and an overview of the real estate transactions that take place. Furthermore, the accessibility then, even if you have the money to invest at current day, it's extremely difficult to find the right real estate that is able to produce a decent yield. And it's pretty much impossible to get yourself into the actually high yielding development projects, because I think that's really where the money is. The rental yield is very nice and it's great. It's actually an asset-backed stable coin is what you can call it pretty much. But at the same time, I think the developments are really the diamonds of the project. So the availability of decent real estate and yield-generating real estate, that's low, and that's something that we can really break with a concept like this because of our network and our supply that we can deliver to the platform here. And I think that's, again, a very major difference with the majority of the players out there. It's very hard, and I can see it on their platforms as well, to deliver There's a lot of investors, there's a lot of interest for these concepts, but we just see it happening. There's a dry market. They can hardly offer enough supply to fill this. And I think that's something where difficulties are always they're always playing part. But at the moment that you have developments and so on going on, you can allocate quite some capital there. So the tokenization process, this is something where we had a lot of questions about. How is this working? This will probably also fill up the Q&A box. So if you have questions on this, please put them in the Q&A box, because this is one of the most important parts of this whole concept. Because a lot of people are asking us, okay, how are we going to do that? You have an asset here, how are we making it digitalized? How are we going to make sure that that asset can be digitally represented and can be distributed to all of the investors that want to move themselves in the concept? And I think this is one of the most simplified diagrams that I can give you guys, and I will brief you on all of the steps that are coming in here. So first of all, there's a real world asset that is ready for tokenization. I think this is the first step. We need an asset, or we need a development project, so all the plans and the audits done by a third party before we decide to take an asset, in this case our own assets, onto the platform. So first of all, this starts with an extensive due diligence process. Is the asset ready for tokenization? This will be a process that we will be processing in a Medium article as well, because this is a very interesting process to read yourself into, especially because of the fact that we are delivering the majority of our own or partners' real estate onto the PropChain marketplace. Means that you can have a feeling that we may be classifying our real estate always as suitable, in which case it may not is. I think that's one of the major worries that an investor can get the moment we present him our own real estate. But this is the reason why we are working with third-party auditors that will be auditing all of the real estate. And we will soon announce this partner as well on our announcements channel, on our website, that is dropping over the course of the next weeks too. So this will be a process done and approved by a third party. This will always be done by the third party because of the fact that we do not want to take part in that, as it may look weird. Furthermore, for the people that stake enough of the PropChain native token, you can be onboarded into this process. You can be in this process to verify alongside of the auditor, to check if everything we do there is legit and if everything is according to the actual status of the property. Furthermore, all of the properties that are getting listed will have an extensive 3D tour that you can find and view on the offering page. So that will also be accessible to everyone. This will also be made publicly by a third party that is going to verify that the actual virtual tour of the real estate is also created at the date that we are mentioning, so for the listing. Then from there, we incorporate a corporate body. So how this works from a legal point of view is that we will have two companies. One company is a licensed company in Lithuania. This company will provide our wallet system, which is custom and which is according to a very high technological standard to comply with all of the regulatory boundaries. This is a very interesting piece of technology that we are building there. And over the course of the next weeks and months, actually, we will be sharing a lot of this tech, because this tech is built in a way that every investor gets an own investor passport. And I'm going a bit deeper into this when we come to the infrastructure slide, but that will be one of our flagship technologies. We need to have a compliant, regulatory compliant ecosystem where investors can verify themselves and where we can do our offerings, our security token offerings, in a compliant way. And I think this is really the piece of the pie that is most valuable to us. So this company will have a license for two things: for holding security tokens, or at least the private keys of them, and to exchange money. So the interesting part there is that all of our users will be able to not only exchange their virtual assets, but they will also be able to board an on and off ramp with fiat currency, which all will be done by us internally. And the best thing is that the virtual asset exchange that is built into our platform, which you can also see over the course of the next weeks, because we are presenting you guys a lot of the UX UI, will be really good to see. We'll have a router in it, so that will select the best liquidity of approximately 5 exchanges. Let's see. from here, we have the asset ownership that gets transferred into a corporate body. So what we do here is that next to the Lithuanian company, we will have a Masters Series LLC structure. The Masters LLC will be the owner of all of the separate corporate bodies that will be incorporated per asset. And I think that's a very interesting process, because what essentially happens here is that this corporate body is formed, the asset ownership is being transferred to the corporate body, and from that moment in time, it has 100% ownership of the asset and of all of the proceeds that are going to be gained from the asset itself. The interesting part here is that all of this process is being done before we list any of these tokens on the platform. So this means that you are always sure that the asset is actually already in ownership of the corporate body before it gets listed. I think this takes away a lot of the risk that is normally involved within tokenization of assets. We make sure that the asset is there. It's not a third party, it's us providing that. So here we are going to move from off-chain on-chain. And on-chain is, I guess, the most interesting part for all of you, because what happens here is that the shares of that company are getting transferred into an NFT contract, basically, which is then being fractionalized. So this NFT is split up into a multitude of fractional tokens, which we mostly calculate by doing the total valuation of the property divided by the total square meters or square feet, depending on the token price by the calculation, to bring a token price of between $50 and $500 per token. From there, there's an interesting and a decentralized smart contract, which is an escrow smart contract. And the moment we list the tokens on the marketplace, these fractionalized NFT tokens will move into the escrow smart contract. In the escrow smart contract, nothing is happening until the soft cap is reached. And what do we mean by that? Let's say a property comes for tokenization and we go for 100% tokenization on a price of 1 million euro. Then until 1 million euro is committed by eligible investors, so that means the investors that are approved by our regulatory system, is something that where the escrow contract is not releasing any of the tokens. So until the soft cap, so in this case 1 million, or maybe in other cases like development projects where we only have to raise 60 or 70% of the funds, we will not release any of the tokens to the investors. So the moment we do not hit it within the auction time, so all of the assets will have a period of 60, 30, or 90 days on the platform until this time limit is reached, nothing will happen unless the soft cap is reached before. So let's say we hit the 1 million in the third day, then the tokens are already released to the investors. If this not happens within 30 days, and the maturity period is 30 days, then what happens is that the listing will be blown off, it will be canceled, and then we can choose to relist it, or we can say, no, okay, maybe this is not the property where interest is for. So if the soft or hard cap is reached, the investors will receive the tokens, and from there, the dividends are distributed to the investor wallets. Based on the distribution of dividends, we will also have a staking module. And the staking module and how much you stake will let you determine the frequency of your payout. So if you stake and you come in the highest tier, you will even be able to distribute your profits on a daily basis. And this means, or the dividends, not the profits, sorry, the dividends on a daily basis. The unique part here is that the investors can liquidate the assets at any time. So if today or tomorrow you need the money that traditionally was locked in the real estate for weeks or maybe even months, you can now just approach the secondary marketplace where you can then list your tokens again up for sale to a different investor in the same structure. Your tokens go into an escrow contract, you choose how long you want to list them, and the moment someone buys them and is eligible as an investor as well, he can purchase your security tokens and you have your money back. Additionally, what we are building now, and this is something which will probably be done after our first MVP, is that we will have a decentralized staking pool. So this decentralized staking / liquidity pool will be a pool where people can participate in the relisting of property. And that is actually a very interesting model, because that can offer instant liquidity to all of the property tokens. Because what this essentially means is that if people have a property token, they list it on the marketplace, but they are not getting a offer, or they are not getting a buyer for their real estate, they can now approach this decentralized liquidity pool and say, hey, I'm willing to get a 3% discount or a 5% discount to offer you my tokens. And this is basically done to the liquidity pool, which is filled by all of the users of the platform that are staking the token. The moment that happens, and of course this goes to a certain degree, because we are not trying to drain the liquidity pool here and hope for the best that someday in time people will buy the token again. We will take the discount, we will make like 3 to 5% on the purchase, and we relist it on the marketplace as being the liquidity pool. And in this way, all of the stakers can make an additional piece of the pie back to their wallets. But this is further down the line, and I think it's something which is really nice to explain you all in a webinar that is fully directed on the staking module and the decentralized liquidity pool. So this is the tokenization process in general. I also saw some questions here like, okay, can I offer my property for list here as well? The answer is no. In the first year, we will probably not give this option. And that may sound harsh, but we do that because we have a mission. We have a mission to show a proof of concept. We have a mission to show the world how this should be done, how other people failed because they didn't have the properties. We want to show how you should be doing the proof of concept stage. And from that point in time, we are going to create a listing module where people can list their own real estate, which can then be voted by the stakers of the prop token, and they can vote which properties can list on the platform. A further stage and a further follow-up there will be that people can really take this to a next level. And this is where we can include decentralized borrowing and lending, because at that point in time, it really gets interesting. The moment some DeFi protocols recognize our security tokens as a collateral for the loans, then what essentially people should be able to do is tokenize the additional value of their house, get the liquidity out of their house, and lend against it. That will be our eventual goal with this concept, but then you're looking probably 1, 2, or maybe 3 years ahead in time, where the market is this adopted that we can use this as a collateral for decentralized borrowing and lending. At that point in time, we will fully cut out the banks, and we will probably be able to unlock the liquidity of the majority of the real estate in the particular country where we launch this, because this essentially is crazy, because you will never need any intermediaries anymore. You probably interact just with a smart contract alone. So the PropChain solution, I think I've already pretty much cleared that up here. We can make it liquid, we fractionalize it, and by the secondary marketplace and the ability to trade, you are able to unlock the liquidity of real estate. We can create low fee structures. We are not paying taxes twice or 3 times or 20 times, because the ownership transfer of the asset is not taking place on the level of the governments. It's taking place on the level of shareholdership. And that means that we can say bye-bye to transfer taxation, or what they call it in the Netherlands, overdrachtsbelasting. It only is once, and it's calculated in the initial transfer that we are doing when we are fractionalizing the asset. So I think that's a very important one. And furthermore, I also think that the full concept in general is also lowering a lot of the fee structures on an ongoing basis. We know the notary fees, we know all of that. And with the structure that we are doing here, and also the legal structure will be presented in a nice Medium article, we are really cutting out all of the ongoing costs that would be the case if we were transferring the asset in a traditional way. So that's, I guess, pretty nice. As I mentioned just a minute ago, the concept can in a later stage bring physical asset backing to decentralized lending. This is something that hasn't been done till date. We can handle the administrative processes quickly by a smart contract. I think that's also a very convenient way. on always having a transparent and quick way to transfer asset ownership and everything that comes with it. The rent collection and distribution, we can now fully automate it. So what will happen is that the security deposit, etc., will be placed on chain as well. The moment a tenant or whatever does not pay, we are able to kick it off the from kicking it off the chain up into the investors' wallets. So that specifies or specializes a process here in terms of speed. Furthermore, a new group of investors can be brought to the real estate industry, as I mentioned in the beginning of my presentation, real estate investors. And simultaneously, when the bear markets kick in, this can be used as a stable coin that is actually asset backed. And I think that's something which is very, very new to the space and to the real estate market in general as well. And the last one is that they can build a global diversified portfolio from the comfort of their phones. We will launch this as a D-app first on the PC, and from there we will come up with the follow-up pretty quickly after. Regulatory framework then. I see there are a lot of questions, guys, so I'm not going to get too long on all of the rest because I think I've said a lot already. What happens from a regulatory point of view, and this is also, again, a very simplified version of the flow that happens here, is that an unknown investor must always submit their KYC data. And from there, the KYC system will verify if this investor is eligible to invest. And next to that, if he is an accredited or a non-accredited investor. From there, we will have a KYC investor, which is included in our regulatory database. And the moment people want to buy tokens or want to exchange tokens with each other, this database is always approached to see and to check if these two investors or the investor that want to make use of the marketplace can actually buy, because we need to comply with all of the different jurisdictions that we are offering in. We have a legal team. We have a legal team structured. The team consists of 5 people at this point in time. We're also presenting all of these names within the next weeks. And this team is constantly busy to check if everything what we are doing from a development point of view is compliant. But not only that, the regulations are ever changing. And this means that we constantly need to update and comply with all of the regulations. Let's see. The infrastructure then, and this is important to understand because which and what compartments are here in this PropChain ecosystem. So first of all, I think that the dashboard, the PropChain dashboard, is something that is foremost important to us as PropChain. We need to be able to issue regulatory compliance security tokens. We need to be able to manage the distributions. We have the reporting system where we need to report all of the performances back to the investors. We have the offerings that we are pushing on the marketplace, and we have the investor allowance. Of course, we need to be able to specify which investors can invest in the project. So the dashboard is basically the backend at our side to manage properties, to manage investors, to manage KYC, to manage regulatory issues, and so on and so on. The on-chain identity is something that is linked to the wallet system. So the on-chain identity is basically a digitalized investor passport that will be used after the compliance checks. It will verify your identity, your regulatory status. It will do the AML checks, your wallet permissions, and the transfer permissions. And this will always be linked to the custom wallet system that is built, where you can track your investments and where you can track your proceeds, your distributions, where you can check your status, and so on. Everything is trackable from the wallet system. We have the exchange, which is mainly used for the digital asset swapping and the fiat on and off ramp. And we'll have the marketplace, where you will find the primary market, where the initial offerings are done, the secondary market, the P2P swap, and of course, the regulatory verification of investors, because this is all linked to each other. There will be a combination between front end and back end and smart contracts. And all of these sections interact with each other constantly the moment transactions take place. More on this and more of these separate compartments will all follow within the first month of 2022, where we are presenting a lot of animations and even a prototype of the majority of the platform already. So that's a pretty quick follow-up, but the majority of the investor side is actually already coming to completion right now. which is nice because that brings us the ability to prototype and show you guys around on what we are building here. The PropChain D app, then some of you already saw some UX UI. We're actually going to do some nice sessions on this so you guys get a bit more of a feeling with the platform. We're still checking a lot. Actually, we have a lot of regulatory checks going on the platform, so there could be minor changes to the front end. The back end is pretty much already compliant, so the front end is really something where we will also do the beta testing and MVP to just check and see what you guys think of the user friendliness and the usage of the platform in general. So this is something where we will be going over together to get it perfect. The mobile application, then, as I mentioned, will be a follow-up. So the mobile application will be a follow-up of the MVP. Gets a bit more complex because of the fact that we will need to have a customized wallet system mobile applicable too. So this is something where we are creating the timeline, but that will pretty much follow up, I think 1 or 2 months after the MVP. So this is, the initial platform version, so after the MVP. So this is something which will follow in the future. We're trying to create an environment on the mobile application, on the mobile website that is coming close to what you will and can expect from the app. So eventually, that's the goal, to build an app that is bringing the comfort to all of you from your phone. So the token utilities, then, I think this is an interesting part to talk about. The token utilities is something that people asked us a bit about in the Q&A I see, and before as well. So the staking is, I guess, the portion that is very important to us. We have learned a lot as well from, of course, the other project. And I think that the follow-up period is something that is really important to understand here. We will not launch this project up to the moment that we are sure that 4 to 6 weeks after the IDO, the platform can launch. So this is something that we want to guarantee. We don't want to drag months of a price action that is pretty much without a utility. And I think that's a very unique thing here. We're not just going to launch out in the open. For now, the timeline seems fine, and it seems like we are able to do the IDO in April. This is what we have scheduled now. Then the first logical step is that we want to follow up with the MVP. The beta testing will go on in the meantime, and our staking module is one of the things that we want to launch pretty much at the same time of the platform. Why have we chosen in this way? And I think that this is something that brings me to the tokenomics. Just to give you an understanding, we have done a pretty strategic vesting interval here, where the vesting actually starts 31 days after listing. This means that 31 days after listing, this will turn from a token that has pretty much no selling pressure next to the TGE here, into a token that has actually daily selling pressure from people that can claim their tokens from the seed, private, public, team, etc. Actually, the team is 61 days after listing, so you guys have 1 month advantage onto the team. Same goes for all of the other pods, basically, that are pretty long vested. And the reason why we want to follow up in that way is to give people an actual ability to use the token, give them an ability to stake the token so they don't have to get rid of it, so they can make more of it, eventually to blow off the selling pressure as much as we can. We want to give the incentive, we want to give the opportunity for people to work with the token and to stake the token and to earn from it. So this is something where I think the timeline is foremost important to us. And this is also the reason why we are very strict on it before we push a token randomly in the market. So the staking functionality will give you access to the portfolio slots. It will give you access to the primary marketplace, to the secondary marketplace. All of these access points need a stake of the token. You can simply not use the platform if you are not staking the token. And you can also determine the frequency of your dividend distributions, the rewards that you are gaining. You can have access to the PropChain vault. And in the end, you will also have governance, but this is something where we are still dealing with the regulator to find out how deep we can go in this governance model. So this is something that will more than likely be clear before we push the token on the market, but this what you see here is all confirmed and will be integrated in the token utilities list. Payment, you will be able to buy and sell property tokens with the PropChain token, but at this point in time, this is something where stable coins and other digital assets are also still accepted. The fees are also structured in a way that you don't necessarily have to pay them in prop tokens. We have an engine in the back that is automatically swapping all the fees to the PropChain token to pay for it. So this means that even if clients do not want to use the prop token to pay for their fees, there will still be a fee in the background that is being charged in prop tokens. So the token tax, the wallet creation fee, the dividend distribution fee, the listing fee, also for us as PropChain, for us listing the properties, we will be paying a fee for that in the native token. And the same goes for the listing fees and the swap fees that are taking place. Even the ones from the exchange module will be exchanged in the prop token. So this creates a constant demand for the token here in general. Then the tokenomics, I think the majority of you guys have been scrolling through it. We are going to build on Polygon. I think the ERC network from Ethereum is still too unreliable, takes too long, gas fees are too high. I think Polygon did a great job of staying very close to that standard, but not giving away these kind of failures. So Polygon was our first and foremost choice. We're already looking to see if we can potentially bridge with some other high potential chains, but we keep that silent for now, because I think announcing these kind of partnerships is way more interesting than just blasting out some names here now. We have a total supply of 100 million tokens. We have a hard cap of $5.4 million here. So this is something which we are raising from the seed, private and public. We have 1.8 in the seed. We have 3.25 in the private and 3.5 in 3.5 in the public sale. The public sale this time will not have 100% unlock. It will have a 10% unlock. We have seed round on 1% and private on 3% unlock at the start. And here you can find the monthly unlock percentages that come free with the vesting. We have chosen for a very decent vesting, also with a longer unlock. We are really in a way where, as we mentioned before, we are not boarding like all random people. We have also kept the public round very small for that reason. We are only building a strategic network of advisors and people behind this project, also with VC funds, also with a lot of players actually coming not from the crypto space, because we really want to create this bridge here. We want to have, because we want to have the strategic players from the other space involved. I think we have all seen what kind of quality the investors from a crypto space bring. And I think here we are really searching for the people that can back us for the long term. So long vesting period again, I think very strategically chosen. And here you see the rest of the buckets that we are having within our total token allocation. And you see that the unlock percentages are fairly low. So we have done that on purpose. We have a fairly okay raise here with 5.4 million, which is pretty much filled off to this allocation that we have opened for PV. So that means we can drag the operations forward for a decent while. The initial market cap, very low actually. We have an initial market cap of 290.5K. So that means we launched with approximately 1/7 the market cap of what we did last time. I think we don't need a high market cap, and I think that the market cap in this way is very decent. Staying under the 500K with a lockup of this 1 month is something that should look very healthy. Total diluted market cap when it kicks off is 35 million. And I think the initial market cap says enough compared to that. The estimated listing date is Q2 2022, as we mentioned. For now, we are really trying to stay on schedule for April. That will be a perfect coverage. It's I think a very decent time frame considering the fact where we are doing this race currently, and I think it gives the utility within, yeah, let's say a month or 5-6 after the launch. So that's after the race here. So that should do very well, in my opinion. token distribution, then how are we going for the buckets that we are running here? I think it starts with the token allocation, as you have seen in the table, and then the use of the funds. So here you can see the percentages that we are allocating. We have a pretty decent bunch for the exchange listings. We have a very, very strategic partnership made that we'll be announcing over the next weeks as well. One of the biggest guys in crypto, I guess, that will be joining us as a marketing advisor. And I think that will really give us a very nice entrance into exchange listings, because yeah, these days it's all about what you can bring in terms of, unfortunately, in terms of hype and publications around your product and project. So yeah, we have done a pretty strategic move there, I guess, and more about that in the next few weeks. 9.71% to the product in general, and 27% to the development. The development is a very costly procedure here. Do note that from more as 140 jurisdictions, we need to program all of the regulatory compliance rules in the contracts, and we will constantly need to keep them up to date. So this is one of the biggest costs for us, also coming from a point where we need to get backend, front end, and backend connected to the smart contract level, because we have a constant issuance of smart contract with the security tokens as well. Then we have a very large pot actually compared to other projects with the legal side of things, and this is mainly because of the fact that we are moving in this regulated space. We have 24.27% to marketing. Marketing in this case is something which is not more difficult, but which is challenging from a regulatory point of view. We need to check all of our campaigns with our legal team in order to verify that what we do is compliant also with the countries which we are marketing in. So this is the reason why we need to spend more there. Let me see. Then we have pretty much the use of funds covered here. And then we have the roadmap, and I think the roadmap is pretty interesting, coming from the Q4 one here. We have the start of the smart contract development that's actually in the works now. We have the first VC partnership that will actually be a bit more than one. Seed round is fully filled. We have the private round, which is also pretty much filled. Public will be done. Maybe on a launchpad. We are still in the conversations of going into a launchpad, or that we are going to do it with the advisors that we have boarded here, which will be pretty much capable of creating what we need for this project as well. We will have a finalization of the light paper. We're hoping to throw that over in our announcements channel within the next week or 1.5. We have the initial platform UX UI, so that will be fun. That will be shared soon too. We are going to drip feed that on you guys, so you get a feeling with the platform, and we will have the platform development kicking off already in the next few weeks. And then the initial advisors and partners, I hope we can really start announcing the majority of them over the next weeks. But since it are the festive days as well, we may move a couple of them to January. And then I think the rest is Q1 and Q2, and we have Q3 and Q4. You guys can all read what steps we are going to take there. I think it's a very decent roadmap that follows up nicely with all of the steps that we have been discussing in this presentation. There's a lot coming. There's a lot of unique things coming, like the Sharia compliant structure, where we are trying to give the investors from this region, and of course all of the Muslim investors, an opportunity to invest in this asset class as well. I know it can be difficult mostly, so we're really trying to open up a market there.